Dan Grandage, you are head of ESG real assets at Aberdeen. Thank you for joining us on BiTV.
Thank you. Thanks for having me.
Aberdeen recently announced its ambition to reduce the carbon intensity of its assets under management by 50% by 2030. What is your roadmap to achieve this goal?
Yeah, thanks. Good question. So firstly, I should make it clear that commitment includes equities, fixed income and real estate only, even though there are other asset classes within Aberdeen. We're focusing on those three asset classes to start with. And from my perspective, I will talk about real estate. So our roadmap is actually at the beginning of this year, actually the end of last year, we published a net zero framework, what we call our blueprint to net zero. And we actually committed to transition all of our real estate assets under management to net zero by 2050. So we already have a framework by which to hit that target. And the way that works is because we're an asset manager and we have lots of funds all doing different things for different clients, we set the rules of engagement. So we've made it clear what each fund needs to do, but the funds can move at their own speed. And what they have to do is they have to produce their own fund level net zero strategy. And then also following from that, individual asset level action plans and strategies. So it becomes really quite detailed quite quickly and quite complicated. So where we are at the moment is working through the fund level strategies. And what that's doing is looking at our total footprint, where we are today, what we think we're going to do out to the future in terms of buying things, selling things, redeveloping, refurbishment, and plotting that out to 2050 so we can see what it looks like as a total piece. From there, that then gives us insight in terms of what we need to do, if there's any assets we need to focus on. But really, it comes down to the asset. What do we do? What interventions can we make? Do we need to replace the heating, for example? Do we need to replace the lighting, the insulation? And the heating is a really key one, actually. One of the things we've realised we're going to have to tackle is actually starting to remove fossil fuel-based heating from the buildings. So in the UK in particular, natural gas is the default heating. We need to stop doing that. So we need to find a mechanism where we can start to phase out fossil fuels and actually move to full electrification. If we don't do that, we're not going to hit that target, let alone the 2050 target. So we have a fairly clear framework of what and plan. We just need to get on and do it, basically.
Okay, because as you just alluded to, in the challenge maybe is to assess the state of the current portfolio in terms of carbon footprint. From a real estate standpoint, how do you do that? How do you assess your current portfolio and its carbon footprint?
Yeah. Again, another good question. So we, for a number of years, we've been collecting actual energy consumption data from our buildings, and we collect that into a central platform. So when we, as the landlord, have the energy supply contract with the energy supplier, we have that information already. However, we have plenty of buildings where we don't have that supply contract, and actually our occupier has that. So we need to build up a full picture. We need to understand what we're responsible for, but also what the occupier is responsible for, so that we get that whole picture. So what we're responsible for would normally be a scope 1 and 2, whereas the occupier's emissions would be scope 3 from a sort of greenhouse gas reporting perspective. So we do look at scope 1, 2 and 3. And it's also worth saying that the commitment that we made to reduce intensity is only focusing on scope 1 and 2 initially in terms of house level commitments, a key point. So we collect the data where we can. We engage with our occupiers to get the data from them, or we install smart metering to collect the data from them. That's the kind of the negatives, the emissions, if you like. Yeah. We're also developing an approach to capture to calculate the embodied carbon. So that's the carbon included in the steel, in the concrete, in the fabric, and the form of the building. So we're developing techniques to understand that firstly, but also to seek to reduce that when we're undertaking action. So we don't do that on every building. We only do it when we're refurbishing or redeveloping the asset, in which case we will take a calculation of the embodied carbon. So those are the negatives. And then on the positive side, in terms of the removals, we're transitioning to green energy from the grids. We're looking at local renewable energy generation. So can we put solar panels on the buildings? Those kind of things. Can we make the building just generally more efficient? And then we're also looking at, okay, well, typically when we look at that footprint to get to a net position, so this is beyond the 2030 commitment, this is out to the 2050 net zero commitment, we want to be in balance. We need to be in net. So we need to make sure the negatives balance the removals. So we expect in some cases we are going to have some residual carbon emissions. We're going to have to work out what we do with those, probably looking at some kind of offsetting, but that's something we're still working through. But, you know, we're exploring, can we invest in nature-based solutions, forestry, for example, within the fund construct, but actually invest in those as a way of removing carbon that we're potentially going to need to do in 10, 20, 30 years' time. So still a lot happening, but that's the broad approach.
Okay, thank you. And therefore, there is the current portfolio, and there is also how you manage the evolution of your portfolio. How does this ambition impact your real estate investment strategy going forward?
Yeah, so it does, and I think it will affect us more going forward as well. So where we are at the moment is we are now starting to calculate the future cost of carbon, if you like, within investment return profile. So when we look at investment returns over 10 years, we're looking at the cost of getting that asset to a Paris sort of decarbonisation trajectory. So what will it, you know, where are we today? Where do we need to get to? And what's that going to cost? So we make sure those costs are fed into the investment returns. And that will mean that there are some assets which we are just not going to invest in because they don't make any sense. But it's also meaning, as we're doing the work I mentioned earlier, that we need to start to understand the cost of improvement. And again, actually, if that cost of improvement is so high, it might be that we decide we're actually going to sell that asset, whereas perhaps we might not have done. So it's affecting what we invest in, it's affecting what we sell. It's affecting what we're prepared to pay as well. So, you know, again, if we know we're going to have to spend £1 million, £2 million or euros or dollars, whatever, it might well mean that we want to try and reduce the price to make that work for us. So there's a number of things. But the final piece as well, which this is not happening yet, but I expect this to happen in a few years' time, is that we will have to start thinking about our occupiers. So as I mentioned earlier, in our carbon footprint, we are including our occupiers' activities. Yeah. So there is a scenario where we might think, okay, I've got this occupier A, who's very low carbon, and I've got this occupier B, who's very high carbon activities in terms of what they're doing. And it might well be that we decide to go for A because that's going to affect our overall carbon footprint. So that will be quite interesting to see if that does come forward, but that potentially will affect you know, the occupiers that we actually have within our building and what we accept and tolerate within their activities. As I said, that's not happening in the market today, but I can see that that's a logical next step within the next sort of 3 to 5 years, but we'll see.
Okay, so the ramifications go very far, if I understand correctly.
Correct, exactly.
Well, that's all the time we have for today. So thank you very much for this insight and taking the time to speak with us. And thank you all for joining us. See you soon on BiTV.